Isn't that rather odd? The market today is rather mixed, but Zebec is massively underperforming, while the attention on the token is pretty high. Usually there should be some correlation between attention and price movement, right? The more people jump onto a token, the more attention there is, the higher the price should go. Now this is not what we see with Zebec. Let's have a look at the on-chain data, the data most people are not considering, to see what's going on. Now here is why I say the attention is high. This was the first video on Zebec on this channel, and it outperformed the average video by 72%. Another video followed, that one outperformed by 68%. So for a small cap, seeing that many people searching for the asset and generating all of those views is not usual. Now when we look at the 1 year price chart, it looks a bit scary. It almost looks like a pump and dump. Now, is that what's going on with Zebec? Are we going to dump further from here? Should we rather exit now? The marketing machine on Twitter is definitely in full swing. Apparently, there's a new record in monthly volume of the Zebec network. 11,000 employees served, $48 million of revenue. But unfortunately, I couldn't find that report on the website. I only found this screenshot on the Twitter page. On the home page, it talks about 50,000 monthly users and 1 billion worth of payroll volume. Very different to what's shown in this Twitter post. There's another potential red flag. On Zebec.io, when we click on Launch App and we select the Solana network, this is the page we get. 403 forbidden. Now, I'm not sure if this has something to do with my local network, if you can access the app, but I don't like to see things like this. I also do not like that there is no activity on the Zebec protocol GitHub repository. So that's a place where programmers submit their code changes. Apparently, there haven't been any code changes for months. We also don't find Zebec on DeFi Llama, which is the leading platform to track decentralized finance applications. Yet we do see 74,000 holders on the Solana chain. Still, Zebec is not among the trending tokens on the Solana chain on DEX Screener. So what's going on? There's a liquidity pool on the Solana chain of $449,000. That's relatively small, given that the market cap is 369 million. From the all-time high, we have dumped 35%. And I'm not sure if all of that price volatility comes from trading activity on chain. Because again, the market cap is way larger than the liquidity on chain. Here is Zebec relative to Solana over time. Initially, the token underperformed SOL massively by 85%. And then at the end of January, things suddenly turned around with a rally of more than 900%. Now, why did we see this initial underperformance? I believe that's because of tokenomics, because over time there will be more and more Zebec tokens. And it appears as if enough people bet on falling prices of Zebec in the past. Have a look at the circulating supply over time. So this comes from Tokenomics.ai. The project started out with 2.2 billion ZBCN tokens, and today we've got 32 billion tokens. And of course, this will continue to inflate further over time. Most trading does not happen on chain. It actually happens on the centralized exchanges, and that's led by Gate.io on the spot market. There's also the perpetual futures market that's led by Bybit. There is an explanation for this recent price decline. I believe that the whales, the heavyweights, are currently dumping on the retail investor. And I'm saying this because of the statistics over here. What we see on the left is the number of wallets that have at least 200,000 Zebec tokens. At the current price, that's a bit under $1,000 worth of the token. So instead of looking at 74,000 wallets, there are only 10,000 wallets that have at least $1,000 worth of the token. Now in the middle, we go at 10x in minimum holding. So that's now $10,000 worth of the token. On the right, another 10x. So that's now $100,000 worth of the token. The whales bought in very early for a low price, then continued to accumulate, and then had a secondary run where the number of wallets roughly doubled. Now that secondary run was way larger for small retail. They 10x'd in numbers. So they tended to buy a bit later. Now the price probably appreciated because of retail. So the number of retail investors is growing very quickly, still constantly, but the whales are currently offloading. And again, the wallets here on the right are 100 times more important than the wallets on the left. So when this is going from 241 to 207, so by 34 wallets, that's equal to 3,400 wallets here on the left. So really the problem is that the whales are currently offloading. If they stop offloading while the retail investor continues to buy, Zebec can continue to outperform. The attention clearly continues to rise. So the trading volume measured in US dollars is increasing massively over time. At the same time, the number of small retail investors continues to rise, while the number of whales is declining since beginning of the month. And that coincides with the price peak, right? This is a whale-driven asset right now. So it seems like initially enough people bet on falling prices, so the price tended to decline, the token inflation was very high, and then with this rally, the shorts got squeezed and the price went up higher and higher. And so the funding rates to bet on falling prices of Zebec on the perpetual futures market is very much negative most of the time. This is not usual. Usually the longs have to pay the shorts to bet on rising prices. For this asset, the shorts have to pay the longs to bet on falling prices. It seems like the short squeeze has now stopped because the funding rates just recently they turned neutral again. The price continues to deflate because the whales continue to sell. The open interest is going down as well, so there's less and less leverage in the price, and the liquidations have stopped as well. So the derivative market is in somewhat of an equilibrium and the whales continue selling. I do believe that it's likely that Zebec, at least for the near future, will continue to deflate for a while. There is a lot of room to further fall, and I think it makes sense to rather copy trade the whales than the small retail investor, right? The whales, they tend to make the better calls. They've got all of that money because crypto is a game of both luck and skill. The people that have more money tend to also have more skill. And so the skilled people are exiting. It might make sense to exit as well, or potentially even bet on falling prices. Now it's quite fascinating that most people take the hard route. Most people try to make money in crypto by finding the next asset that does a 10x return. The problem is that most assets don't do that. Most assets go down. There are a few assets that take a lot of the returns, but it's a market where the winner takes most. On top of that, we also have to be right about the macro environment, as in if Bitcoin goes up, then most altcoins go up as well. When Bitcoin dumps, most altcoins go down as well. So really, I think there are smarter ways to make money. I think it's better to try to not focus too much on the macro. I think it's better to find price discrepancies where you don't have to find the few winners. Let me show you what I mean. What do you prefer investing in? Is it the line at the top or is it the line at the bottom? Now at the bottom, we see Bitcoin's price movement. So this chart starts in February 2024. And as you know, we have seen quite a bit of a drop during that time, a 30% decline after we're now back above 100K. But the chart at the top has much less volatility. During that time, it appreciated by more than 1,000%, while Bitcoin went up by only 115%. Or have a look at this chart here. This starts in November of 2020. And it went up by 9,000%. But at the same time, here is Bitcoin, it only went up by 500%. Now what I'm showing here with those charts at the top are actually not altcoins that outperformed the rest. It's not one of those few winners. Instead, we looked at relative valuation charts. So we looked at the Bitcoin price relative to a very poorly performing altcoin. Now I'm not saying what kind of altcoins this is, but in general, this is also a Bitcoin chart here at the top. It's just not relative to the US dollar, but relative to a very bad altcoin. Let's make an example. Check out this. This is PIF. PIF had a lot of token supply growth in the last 30 days. So here are the tokenomics of PIF. Over time, there's more and more supply hitting the market. Now, if demand doesn't grow as quickly as supply, the price should be going down. And as per tendency, that is right. So this is now the PIF chart. Now, PIF is an asset on the Solana chain. So let's compare Solana with this. The price didn't always go down. And that's because sometimes Solana rallies. And so PIF comes with it. Again, the problem with correlation, the problem of the macro environment. But when we look at that PIF chart, not in US dollars, but relative to Solana, suddenly we've got a much more stable trend. Now, this is not necessarily the trend we want, right? We don't want to buy PIF, but we want to do the exact opposite, right? We might consider buying Solana and betting on falling prices of PIF at the same time to then get the delta. So in the end, we cancel out the macro because we are long one asset. We bet on rising prices of one asset, in this example Solana, and we're betting on falling prices of the other asset. So in this case, PIF. So overall, what the overall market is doing when it's going up and down, it doesn't matter to our portfolio because one thing tends to go up, one thing tends to go down. The only thing that matters is the relative performance. And then we've got very constant declines. Or if we now flip this chart, if we don't look at PIF relative to Solana, but we look at Solana relative to PIF, we get our nice growth charts. So this is now a more than 500% increase. And again, it's much less volatile compared to buying Solana directly. So this is, I believe, the easy way to make money in crypto. It is a bit more complex than just buying a random altcoin, but in the end, we have the odds in our favor because, again, most altcoins tend to go down because the supply expands over time, and we are also hedged against the macro. We don't care if Bitcoin and Solana go up or down because we go both long and short at the same time. We can have a very constant growth this way. And here is what I mean with constant growth. This is my portfolio development since I started trading this long short strategy. The maximum drawdown was 5.67%. The equity is 36K and the growth over the span of roughly 2 months was 11K. Now, the most important thing here is not necessarily how much this grew. That's of course nice. But what I really like is that the drawdown was so low. We don't care about the macro. We don't care if things currently go up or down. All we care about is pricing inefficiencies. And so think about it. Do you want to buy a lot of different altcoins hoping for the one moonshot that might make up for all of the losses that in the end might never come? Or is it maybe better to just continuously grow with very little downside? I think the latter is better. If growth is predictable and if you can manage our risk properly and if you can make money independent of the market situation, we've got something that's much more valuable than just trying to find the 10x that might never come. Now again, this strategy is not as straightforward as just buying an altcoin on a centralized exchange. We do have to learn a little bit, but I actually made a video just on that topic. You don't have to watch every single video here, but the one at the top, that's the most important one. Using perpetual futures on Hyperliquid to bet on relative valuations. It's 34 minutes after you've watched this. You should understand how to do all of those setups. How to bet on charts like this or how to bet on charts like this. And how to have the odds in our favor, right? With all of those red bubbles over here. And again, be independent of the macro. It's the constant growth that's really attractive. So again, here's that tutorial video. It's part of the premium membership, thebitcoinstrader.com. And of course, I also share my own trades. For example, over here, I shorted WorldCoin recently. WorldCoin relative to Ethereum. So we're betting on Ethereum to outperform WorldCoin. So that was on the 23rd of May. I'm sharing this because this position is now closed and I closed it on the 28th of May. And so in the end, when you've got the right risk management in place and you put on some leverage on the position, you can make really nice gains. Here was the Hyperliquid chart at the time. So it already went up a little bit since then. But yeah, people are making money with this, right? This is not just me cherry picking the data. Here, have a look at this. This was one member that made some money with the WorldCoin short. Another one over here and here and here. Thanks, Gerhard. The premium membership paid itself already. And so that's in the end the fundamental idea, right? It's about making consistent gains. It's not about buying random lottery tickets, hoping for the one salvation trade. So feel free to check it out. It's currently $125 per month. It used to be 165, but currently the attention on crypto is comparatively low. Once all the tourists enter the space, I will of course raise the price again. Right now, if you sign up today, then you will lock in that price. So everybody that signs up now will not get affected by the future price increase. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. There should be a link to Premium directly over here. You just click on that card and it will lead you directly to the sign up page. See you over there. Cheers.